protecting Main Street from Wall Street. It's Chris Hoffman with Money Unleashed.
How much money do you put into your checking account from work on a month-to-month basis? It has a high probability that with your investable assets, we can replace that paycheck.
It's time to put you back in control of your money.
You've worked for 30, 35 years. It's time for you to not stress. It's time for you to enjoy and live the retirement you want to live.
It's Money Unleashed with Chris Hoffman.
This is Money Unleashed with Chris Hoffman at the Hoffman Financial Group, proud partner of the Georgia Bulldogs and the team ready to help you create your financial dynasty. Get started with us today at 404-341-6767 or head on over to unleashyourmoney.com and schedule that time to meet with us. Now, you may not have noticed, but you might be feeling it a little bit because fall's in the air. It's the fourth quarter, and that means it's crunch time as we close out 2024. Morningstar has a checklist that might just help retirement savers finish the year strong and head into 2025 with everything in order. Chris, you know all about calling the plays, so let's tackle some of these topics for those still a few years out from retirement. And let's lead it off with what we can do with our tax-deferred retirement accounts.
Yeah, so that's the million-dollar question, right? How much do we fund from our paychecks into our pre-tax 401k? And I would argue that when you get up to about $450,000 or $500,000, anything in excess of that will cause a tax burden for you in retirement. And that's a relatively low number. So I'm not saying you stop at that point, but important to consider opening up the 401k Roth and starting to contribute to that. Because this says fund your tax-deferred retirement accounts. Would you rather just fund it and ignore the taxes for 30 years of work? Or would you rather bite the bullet, pay the taxes, and retire with a massive amount of tax-free money? It's out of sight, out of mind, folks. When they take it from your paycheck and invest it and you never see that money, do you want that money to be tax-free growth? Or do you want that money to haunt you in 30 years of retirement? And I'm telling you, it haunts people. If it's all IRA money, you're in a tax trap. The government has you by the throat. And I don't like being controlled by the government. And I don't want my clients controlled by the government. So we like capital gains and we like tax-free investments. There are three buckets of money: tax-free, tax-deferred, and taxable. Which one is the worst? Pre-tax, period. But we keep pumping money into pre-tax 401ks because we don't want to pay the taxes. When you first start, now we don't manage money for 20 and 30-year-olds, but when you first start and you're 20 years old, you should not put any money in a pre-tax IRA, period. Your tax bracket is relatively low. When you get to your 40s, and you're at your highest wage earning years and you're saying, oh boy, this 40% tax rate or this 50% tax rate, everything included, is really a bite. That's the time to flip it and start to balance it with a pre-tax 401k. And again, I would target about $500,000 in that and then assess it with your financial fiduciary advisory team to make sure that you're not creating a tax burden for yourself going into retirement. That's the way I would look at funding a tax-deferred retirement account.
Now, IRA maintenance, there are a few things that we can do, not just to the end of 2024, but even into the new year that could be advantageous for us there, couldn't it?
Yeah, I mean, why people are not using the backdoor Roth loophole, I have no idea. But we recommend it to every one of our clients. Contribute you can contribute to an IRA even if you make too much money. You just can't write it off on your taxes. So make that IRA contribution, $6,000 or $7,000, pay the taxes on it, and then move it. And move it to your Roth IRA. Very simple. They have not closed that loophole. They probably will if they ever wake up to it. But that's an option for you as well. So your IRA should constantly being reviewed by your fiduciary advisory team to determine, all right, how are the levels of the lake between tax-free, tax-deferred, and taxable? Are we performing backdoor Roth conversions every year? And are we balancing the levels of our money to make sure that we decouple ourselves from unnecessary or excessive taxation in retirement.
You talked about having things reviewed by your fiduciary advisory team. And one thing I hear, we talk about it all the time on the show as well, is, where is your portfolio's asset allocation? How are you set up? And there's a great way we do that here, I think. And spoiler alert, it's called the Portfolio X-Ray.
That's right. Yeah, it's a Portfolio X-Ray. You basically call us, book some time on our calendar, and then we'll have a physical person call you Monday or Tuesday of the following week and basically work with you on getting us the documents we need to build a full Portfolio X-ray, which is about a 10 to 14 page document, breaks down your growth targets, breaks down your historical growth, and it will track it all the way back, including the Great Recession, to see what your maximum drawdowns were during market failures or market pullbacks. And then we can assess, all right, how much do you have in pre-tax, tax-free, taxable monies? How much income do you need in retirement? So that Portfolio X-ray is our foundation to build our financial house. And that financial house then comes with a complete financial plan and tax-free strategies along the way as well.
Yeah, that house, that full financial plan, that's also on this checklist of just things to make sure that you've revisited before 2024 comes and goes.
Yeah, and it's amazing to me how many advisory teams out there only focus on the investment side. I don't know whether that means they're working half as hard as we are, or whether they're putting extra time into that. But you need a balanced attack, folks. You need an offense and a defense and special teams. But the offense, okay, that'll be your investments. Are they growing? Are they generating the right returns for us? Are they protected against excessive pullbacks when the market pulls back? That's one half of it. The other half is building the full financial plan over a 30-year retirement life, dealing with taxes, income, distribution, back to you, and legacy planning. You got to have both. And I would argue that the majority of the people that call us and come in for the first time have a pretty good handle on their investments, but they have no financial written plan. Folks, if you're in your 50s, it's time to get that plan in writing, even if you're not retiring in the next 2-3 years. If you're about 5 years out from retirement, you definitely want to get that full financial plan. Why? Well, you might have a targeted retirement date, but could your company change it? Possibly. They're in control, right? They could have layoffs or furloughs, et cetera, et cetera. They could run into financial difficulty at certain times. Are you sure you've got a guarantee that your corporation won't say, hey, look, we're done. This position's no longer available in the company. So get with your fiduciary financial advisory team, put together not just an investment plan, but a full financial plan, including taxes and income. And that should solidify your knowledge in when and how comfortable you can retire.
All right, we're looking at the table. We've got the puzzle. We've opened the box. We've got all the pieces spread out across here. We're putting together that framework. Anything else that you can think of that we should prioritize before year's end when it comes to our finances?
Yeah, if I'm looking at a fiduciary advisory team, I want to know their full service. I hear many, many stories where people that used other advisory teams, when they would ask about taxes, they would get a very generic answer. They would kind of get pushed off, or they'd have to schedule a meeting with another tax division. Look, you want to make sure your financial advisory team understands fully the tax impact and can map it out over your whole retirement life, because taxes are a big issue in the U.S. right now. So make sure your advisory team, yes, they have to be competent with investments and investment strategies and monitor it and hold themselves accountable to certain targets. But they also need to be open and knowledgeable about taxes. That's a big one. The other thing that I don't see with a lot of fiduciary advisory team is the full financial plan, the income plan. So in retirement, you go from just being focused on growing my total net worth, growing my portfolio, growing my 401k or my retirement accounts. And you've got to add two important legs to that pogo stick you've been jumping on for 20 years plus. You got to add an income plan and you have to add a full retirement plan, which means you have to have protection strategies. So take your growth targets, keep them, and keep them high. Put that pressure on your fiduciary advisory team. But add an income and distribution plan, which includes tax strategies, and then hold your advisory team accountable to answering this question. How protected am I? Set the growth targets first, right? Because I also think Wall Street exonerates themselves and gives themselves an excuse on not growing assets and saying, well, you have a highly protected portfolio. It's why I hate target date funds, folks. There is a season and time for all asset classes. And if your fiduciary advisory team is really glued in and managing this stuff and monitoring it every day, 24/7, including the pre-markets and after-markets and international markets, you should win in any environment. You should win when the market's going down, and you should win when the market's going up. Maybe not daily or monthly, but certainly year over year over year, you should be in a much better position if you don't allow your financial advisor to make excuses on why you're not growing your money. Well, Mr. and Mrs. Smith, you didn't match the S&P 500 because we have a conservative portfolio. Wrong answer. Mr. and Mrs. Smith, you lost a ton of money because we have everything in the stock market and you're just going to have to wait for it to come back. Right. Wrong answer.
Right.
Like, why would you hire somebody to tell you that when you can do that nonsense on your own, folks? So do I think we've got a better plan? Do I think we build portfolios and financial plans that are different than most other advisory teams? I do. If you want to test us, give us a call at 404-341-6767 or go online to unleashyourmoney.com, click on the Portfolio X-ray, and get a different view on how to manage your retirement life. It's extremely important. Your health and your wealth kind of go hand in hand, but we can handle the wealth side for you.
404-341-6767 or sign up at unleashyourmoney.com. Chris, I mean, we talked about all the parts there of putting together the full financial plan, of getting it going with that Portfolio X-ray, but you brought up a term. I heard it many, many times, and I've heard it many times on this show, fiduciary advisory team. Why is that distinction so important?
Yeah, well, the important part is not just languaging a team, but demonstrating you have the team. The CFPs, the financial planners, the tax specialists. You can't just be an advisor and not have a team around you to answer all these questions. You don't want to be a jack of all trades, master of none, and you don't want to pigeonhole your clients into just one specialization that you have, which is stock and bond investing. So you need to really analyze, and I would ask that question of your fiduciary advisor if you're out there interviewing any of them. I would ask them, okay, so who supports you? How many people? What are their licenses? What are their certifications? What do they focus on? And can you bring a full team to bear on my portfolio and on my financial plan? If the answer is it's one person, keep in mind they've got other clients. So they need to have an army at the ready for you for any scenario you run into in retirement. And I believe we do at Hoffman Financial Group.
Give us that call today, 404-341-6767, or sign up online at unleashyourmoney.com. Chris Hoffman is an investment advisor representative of Brookstone Wealth Advisors, LLC, a registered investment advisor and affiliate of Brookstone Capital Management, LLC. BWA and Hoffman Financial Group are affiliated under common ownership. Registered investment advisors and investment advisor representatives act as fiduciaries for all of our investment management clients. We have an obligation to act in the best interest of our clients and to make full disclosures of any conflicts of interest. Please refer to our firm brochure, the ADV 2A, page 4, for additional information. The Hoffman Financial Group and WSB are not affiliated. Exposure to ideas and financial vehicles discussed should not be considered investment advice or recommendation to buy or sell any financial vehicle. This information should not be considered tax or legal advice. Individuals should consult with a professional specializing in the field of tax, legal, accounting, or investments regarding the applicability of this information for their situation. Any client experiences discussed during the show are unique to that client. They are not meant to imply or suggest you will experience the same results. Past performance is not a guarantee of future results. Investments will fluctuate and when redeemed may be worth more or less than when originally invested. Any comments regarding safe and secure products and guaranteed income streams refer only to fixed insurance products. They do not refer in any way to securities or investment advisory products. Fixed insurance and annuity product guarantees are subject to the claims paying ability of the issuing company and are not offered by Brookstone. Index or fixed annuities are not designed for short-term investments and may be subject to caps, restrictions, fees, and surrender charges as described in the annuity contract. Please refer to our firm brochure, the ADV2A Item 4, for additional information. Hoffman Financial Group is not affiliated with or endorsed by the Social Security Administration or any other government agency. Insurance licensed in Georgia, number 163546.